MegaPro provides quantitative medium and long-term trading signals to today's investors by analyzing data from 6 comprehensive and distinct areas.
In this video, we're going to talk about how to use McClellan oscillator for fear-greed investing. One of the most renowned and successful investors, Mr. Warren Buffett, once said this famous quote, "Be fearful when others are greedy and greedy when others are fearful." What we learn from his advice is that people are naturally irrational. That's why if we can fight the impulse and act in the opposite way of most investors, we can be rewarded a considerable return. Based on this investment philosophy, our company is devoted to fear-greed investing. We generate fear-greed ratings from market data and indicators. With the help of the rating, we get to know when to buy in certain stocks and when to reduce holdings of them. But before we dig further into the indicator, we need to learn one more concept that is fundamental in our investment strategy, which is mean reversion. In short, mean reversion states that stocks with high price will eventually drop in value and vice versa. The concept assumes that every stock has its long-term average price, and when the market price of it deviates from its long-term average, the price of it will eventually revert to its mean level. To see how we can apply the concept into investing, I have a short example for everyone. When people are hyping up a stock and rushing to accumulate shares, we should instead be selling the stock, as in the long run, we expect the stock price to return to its long-term average, and thus we benefit from the drop-off price based on our position. This is exactly what we do with fear-greed investing. We sell when the market is greedy, that is, when the stocks are overpriced. We sell at these moments and wait for the price to revert back down. We buy when the market is in fear and stocks are underestimated. We accumulate shares to reap profit when the price bounces back up. In this video, we will be specifically introducing one of the popular market indicators, McClellan Oscillator. It is a market-breadth indicator showing the shifting sentiments in the market and the strength of index trend. We now look at the detail of the indicator. It is actually based on difference between the number of increasing and declining issues on a stock exchange. So here we can see that the formula potentially compares between 19-day and 39-day EMA, as the difference between 19 and 39-day EMA is attributed to the coefficient assigned to the current day difference of advancing and declining stocks. When 19-day EMA is greater than 39-day EMA, we have more advances than declines of stock on that day, and the indicator is positive, showing that people are accumulating shares. While when the opposite happens, the indicator is negative, signaling people are selling stocks in the exchange. After the introduction of the basic concepts, we could go into our indicators and see how we can utilize it on our website. Based on basic MO, people have made some slight adjustments to the indicator to make it more effective, which is the indicator called RANA. As its name suggests, we no longer use the number of net advances, which is the difference between current day advances and declines. Instead, we calculate net advances as the percentage of number of advances plus declines multiplied by 1,000. This solves the problem of MO being only effective in shorter period and makes it possible for us to look at results from longer period of time. And for reference, our data normally fluctuates within the range of negative 100 to positive 100 as for RANA. The interpretation of RANA is similar to MO, with positive number indicating people buying stocks and negative number meaning people selling shares. From here, we can go and take a look at our website, megapro.com, which is megapro.com. We've got a number of data available here, and today we're focusing on fear-greed investing. Our investment strategy is based on Warren Buffett's wisdom. Be fearful when others are greedy, and greedy when others are fearful. That means when people are greedy in the market, we want to sell our position, and when they're fearful, we want to buy. We got several data here, and today we're going to be focusing on the McClellan oscillator. For this indicator, when it falls into the fear range, that's when we want to build our portfolio. when it's in the greed range, we want to sell our holdings. We got the indicators for different stock exchanges. First, we look at the data for the NYSE exchange. Right now, it's in the very fear range, which means that we want to buy in the stock. And for the Nasdaq exchange, it's currently in the neutral range, so we don't have to do anything with it right now. We got trading signal guides and some backtest statistics available on our page as well. So next, we'll dive into some of our backtest results to show the competency of our investment strategy. First scenario, we look at investments that buy at the first fear signal and sell at first greed signal. Such strategy reflects the tendency of an average investor who wait until the market price is high enough to sell. In our 10-year test period, there are a total of 55 trades matching with this specific strategy, of which roughly 76% won, with a total return of 175.22%. The median holding time of this scenario is 28 days, meaning that the investors roughly complete this kind of trade monthly. Second scenario, we look at investments that buy at the first fear signal and sell at first very greed signal. Such strategy reflects the action of an aggressive investor. In the 10-year test period, there are only 27 trades matching with this tendency, of which roughly 70% won, with a total return of 227.52%. The median holding time of this scenario is 52 days. Last scenario, we look at investments that buy at the first very fear signal and sell at first greed signal. Such strategy reflects the preference of a conservative investor who do not buy in until the price is sufficiently low. In 10 years, a total of 34 trades occurred under this strategy, of which roughly 76% won, with a total return of 76.47%. The median holding times of this scenario is 28 days. From the spreadsheet, we can easily compare the performance between the three strategies. The aggressive trades happened much less than the other two types, but earning a superior return, highlighting the compensation for taking higher risks. The conservative trades, on the other hand, doesn't perform as well, resulting in less than half the return for even average investors. Both aggressive and conservative strategies have less trades matched, since they have stricter criteria on the timing of changing portfolios.
Thank you so much for watching. MegaPro analyzes data from 6 distinct areas to provide quantitative medium and long-term trading signals for today's investors. Technical analysis, money flow analysis, sentiment analysis, fundamental analysis, policy analysis, and event analysis. Please like and subscribe to our channel, and take a look at the description down below for additional information.